All right, let's get the microphone check out of the way here. Let me know if you can hear me okay. We did update some software over here, and it screwed up all of the microphone settings. So let me know if you can hear me okay. If it's too loud, too soft, then let me know in the various chats, including the public chats there on the public live streams for YouTube and Twitch. And we'll get started here shortly. All right, let's go ahead and get the music under control here. So I'm hearing that the music is a little too loud in terms of the music to voice mix. So when we do turn the music on later, we'll just keep that a little bit lower. For right now, we're gonna fade this down. I feel like the microphone is picking up a lot and not doing any noise canceling, so but that's okay. I'll figure out the what they did with this most recent update. For anybody out there in the chats, it is a it's one of the Shure MV7s, and just pushed an update to it, and it completely nuked all of the profiles. And I feel like it's picking up a bunch of room noise, so it's all right. We'll deal with it for today, and then let's just go ahead and roll on into Macro Mondays. Hello, and welcome to Landy's Crypto Corner. Today is, well, it's December 4th, 2023, and welcome to Macro Mondays. This is where we look at the longer-term timeframes on various assets and indices, and we weave that into our lower term time frame analysis. So we're looking at Bitcoin, and we're going to start with Bitcoin today, of course, as always. And you'll probably note that as I've been talking about in the past few live streams and the Bitcoin in 60 seconds videos, when we did see this close come in here, and my criteria was a close above 37.7, specifically, that we would start to see Bitcoin pushing up to the monthly at 38.5 and the weekly just above at 39 to 40K. And in the past couple of videos, I did say that if Bitcoin did break out above around 39 to 40K, then I would expect it to march up to this weekly here at 41.8 to 42K. And we have now fulfilled that upside target. Now, today we're going to talk a little bit about what that means in terms of hitting this weekly up here, and then, kind of what to expect in terms of further upside potential, and then areas of interest in any pullbacks to the downside here. Now, you can see that Bitcoin has gotten a nice compression on the Bollinger Bands to re-expansion on this move up. So this is a markup phase. Now, something to be careful about whenever you do see expansion of the Bollinger Bands, and you'll note that when you do see expansion of the Bollinger Bands in this case, you see that both the upper standard deviations and the lower standard deviations expand at the same time, because it is a, first, second, third upside standard deviations or upper standard deviations away from the basis, and then first, second, and third to the downside. So the lower standard deviations away from the basis here. And what you want to see is whatever it is, whether it be Bitcoin or a stock or even a Forex pair, what you're looking for is, for strength in that direction to remain valid. You want to see the asset or indice trading and closing above the basis, right? So that's going to be your directional bias for expansion. And in this case, this is pretty good expansion off of this sideways and up compression. We saw a nice pinch into the basis band here of the upper and lower bands, and then nice expansion to the upside, fulfilling our targets here. Now, that also means that if we do see a retracement, we want to see, for this particular move to remain in its expanded posture or in a high volatility upside environment, you want to see it remaining above the upper first to the basis. So in this case, that would be the weekly now here at $39,000 to the basis at the weekly just below this monthly at 38.5. We have this weekly at 37.7, and that was our criteria for looking for further upside anyway. And in this case, if we did see things fall to the lower first, it would be below the most recent higher low. So what we would want to see is for the basis to keep moving up, and then for the lower standard deviations to start curling up, and that lower first to get above this most recent higher low. And you could make an argument on a swing chart that there's also another higher low right here at the weekly at 37.7. That's a fair argument. But in this case, I would take the low just before that, and in terms of a structural 3-candle closing low. And that low is going to come in at 36,715. And it's right here between these two weeklies. So if Bitcoin was to pull back from this weekly up here at 41.8 to 42K, the first area of interest would be this 39K at this weekly to around this monthly at 38.5. And below there, then we look down to where the basis is coming in at this weekly at 37.7, and then give it a range down to the next weekly at 36,200. If that did fail, then I would look down to where the lower second standard deviation currently is, and that is coming in at the monthly at 35K. And I would give it a little bit of room down to the spike low into this historical weekly level at 34,750. Now, this is a strong move. We're in a bit of a parabola structure here, and especially coming off of the local range break from that 31.8 range break, and then when we saw a little bit of a pause here around the $5,000 high and the open there at 33, we've just been kind of going up and in a parabolic fashion. And this is, like I said, it's been very bullish. There was nothing bearish about this structure, and those that were shorting it are what actually fueled this nice spike up into the next weekly level. And this is going to remain this way as long as people are chasing. The only real way that this is going to settle down is if we see some strong spot selling along with derivatives contracts opening at the highs and really running out of those bids. And coming into the end of the year, all the ETF talk, the bullish structure on the longer term timeframes, like when looking at the monthly, which is something that we are going to just roll right into now. This is all pointing to, at minimum, as we've been talking about for a very long time now. I mean, since Bitcoin put in the major low that is now confirmed as a macro low. And again, the criteria for a macro low, was not set until we saw this 3-candle monthly structure right here with the close in October. that solidified another major low and a breakout of a long form consolidation that then, basically ticks the box for this prior major low to be the macro low. And the macro low is in now. It was confirmed in October. Big up candle, close above the upper first. That gave us our target of the upper second standard deviation. And then if we did see that area break, what we were looking for is kind of what we're seeing right now. And that is Bitcoin trading up, not necessarily to the upper third, although it could, and maybe even higher and push through it. We have seen that quite a bit before when coming off of a compression. In this case, we're looking to the next big high. That's coming in at 45.5 or so, to the wick high there at 48.250. You can also take this close open here, and this is what you're going to see on the Bitcoin in 60 seconds chart, and that is the close open at around 47,000. Above there, it is looking as though, it would want to mark up to around, if it just swings this high, we're probably looking in like the $50,000. So if it swings 48.5 or so, 48.250 to 48.5, it's likely that we'll probably see price, get a little euphoric around that area, probably push into the 50K, low 50K region. But from the monthly chart, the next big area would be to start looking at close opens at the all-time high area. And that would be 55 to 57,000 at these closes on the bearish monthly candles at the highs. And then we take the actual close opens just above at 58 to around 61.5 or so. And then above there, it's all-time high. Party's on. Probably see this push a lot higher. So in this case, I would still be exercising some caution in terms of, being like, it's just green button all day to the moon, because there is a lower high just above price action right now. That doesn't mean that it can't just slice right through it and go for the all-time high. But I would expect some sort of pullbacks here pretty soon, even if they are just lower term time frame bullish pullbacks. Now, when I say lower term time frame, lately it's been like the 15-minute. We have seen some fairly, excuse me while I adjust my chair here. We have seen some fairly bullish pullbacks in these lower term time frames. Like when looking at the 4-hour here, you can see that Bitcoin has just pulled back into higher low structure here on the 4-hour all the way through for quite a long time since the October close, coming into November. It's just been sideways and up, and kind of grinding the bears right out of the derivatives markets. And then of course spot is the big driver of this as well. But all of the key areas have been hit level by level, and there has been chances to trade this. I mean, 35K, we saw some spikes above, dips back below, the weekly, monthly here, and then a spike right into those two weeklies, kind of consolidate, came down, tapped on the monthly, weekly area again. That was a very good call on that one because it got it nearly to the penny. Came back up and just kind of oscillated around the two weeklies, dipping a little bit below and a little bit above, and then boom, off to the races again. So a nice bullish consolidation there, and then right up to our weekly target. Now above there, I would be looking for a run to somewhere around the 45.5 monthly if we do start seeing daily closes, and especially a weekly close above this 41.8 to 42K area. That is the next logical place to be looking. Above there, we could see the monthly to that monthly wick high at 48,000, 48,500 or so, 250 to 500. The monthly close, though, is going to be a big one at 47,100 to around that 48.5 or so, depending on your exchange. Just note what the markup is if it is trading at a markup on some of the derivative exchanges, because we are using spot as our base for looking at price moves in this case. So this is also going to possibly try to fulfill criteria if it can close above the upper second standard deviation on the monthly chart here. which is currently at 39,500. Now, this will change pretty drastically throughout the month if price is just oscillating around that area. And in fact, that is one of the pullback areas, around 39 to 39,500 at that weekly, 39 to 40K. Now, if we do see the December close come in above there, then I would be looking for, I would be looking for not only this high to get ran fairly soon after, but I would be looking for the all-time high to get ran. If things don't happen before then, you cannot rule out that this isn't just going to leg up to the all-time high from here. It is extended, and that would be a massively overextended move. For a little bit more than a little bit less than 4 weeks until the monthly close. So, but it is not out of the realm of possibility when you start seeing things trading above the upper second standard deviation. But be aware that if it does drop it, upper first is right there at $33,000 and likely to tick up to some of the more important areas, $34,000 to $35,000 where the monthly close open is over here. Especially if we do see, maybe price just kind of oscillates around the 41.8, 42. Maybe it spikes up to the upper third. It runs these highs and then comes back down. That's perfectly fine. Still very bullish. And we're going to start seeing the monthly really build a bullish structure on the bands as well. If Bitcoin, holds the upper first, upper second area, we're going to start seeing the basis on the monthly turn. And that's a big, big one. Now the basis, of course, is the 20 simple. We are going to start seeing expansion of the lower bands as well. And this is where we have seen the contraction phase into expansion to the upside. It is almost, how do I say this? It is very unlikely, I should say, that Bitcoin would run the lower bands at any point. And this is where we're getting some of the, ultra bears kind of talking about, well, they're just talking nonsense at this point. It's a lot of copium for getting their calls wrong. And, from a technical point of view, you can see that the lower second standard deviation is down there at $13,000. But we have never seen expansion to the upside in really, I don't think I've ever seen monthly expansion to the upside in anything that has then gone down and tagged the lower second after it's, at the beginning of the expansion stages. It's always things are expanded and then it starts to mean revert and then contract very quickly. And then we see a move to the lower second, much like what we saw over here already, at the first bottoming area around 17,500, went down for another drive and hit our target there pretty much to a T there at 15,500. So this is going to be very interesting to watch in the social media spheres as this begins to really kick off. And I've told many of you, I've said it during live streams as well, that if you haven't been in the Bitcoin market specifically before, and you are you've only experienced a bull market to bear market, and you haven't seen that transition from, bear market to bull market again, it's very difficult for a lot of people to understand that things are just they're going to run out all of your signals. If you got indicators, it's going to basically blow all of them out of the water to the upside. And every signal you're going to get from here on out is going to basically be, in the time frames lower than some of these, like a monthly time frame, for instance, and maybe some of the weeklies. You're really going to everything's going to be sell everywhere on every single indicator, every single technical tool. And this happens across, it happened even in traditional markets as well with SPY, NASDAQ, and Dow as well. But you have to really then pay attention to volatility on the longer term time frame. So that's where your bias is going to be what am I seeing on these longer term timeframes as it relates to those lower term timeframes? And then you take those areas of interest, because when you get those pullbacks in a very bullish environment like this, they get picked up very, very quickly. And it usually defies all, logic. It's not that it's not technical, because then you just have to default to, your trend, support and resistance, volatility, and that's going to drive things like momentum. And honestly, most of the crypto market, you see that many people rely on momentum oscillators. And quite honestly, that can be very misleading if you are not looking at volatility. But let's look at momentum now that I've said that. You can see that Bitcoin, I noted, did get into the overbought area on a regular Stoch. This is not a Stoch RSI. This is reading price close over close to define momentum. That is your classic Stoch. And in this case, we can see that the momentum pivot is at $36,000 now, as Bitcoin has pushed forward quite a bit from where it was. And the biggest moves typically happen when it is in when most assets or indices are in the overbought and oversold zones. That's where you see the biggest moves. So in this case, we saw the biggest moves when Bitcoin had already entered the oversold zone down here. That's where, we saw it entering and consolidating, got into the oversold zone, going sideways, and then another drive down. And that wasn't the biggest move, but it was one of the bigger moves down. So we're probably looking at a scenario like that, even if we do see things going a little bit sideways, maybe sideways and down. But I do think that sideways and down is going to present just an opportunity for those that are willing to take it. That's personal opinion, not financial advice. We can also see that the expansion of BBWP is beginning to show a little bit more strength here. Moving average is pointed to the upside, also giving us another indication that any moves to the downside are likely to get picked up by market participants, and then continuation to the upside is more likely. This is even more of a bullish case when looking at the 2-month. Let's go ahead and pull this out to a 2-month chart that's a little bit longer here on the index. We can see that the 2-month chart, which is going to close with the monthly, quarterly, 6-month, yearly, so on and so forth, is pivoted at 23,800. So quite a ways away from price action. That's very, very bullish in terms of its momentum pivot. But you can see that this is going back into a cool down. So as soon as this begins to get expansion, which is likely to happen, above the upper first, which it is not near yet, and that's at $47,000. Hey, go figure, 47,100 is one of the monthlies up here, isn't it? Yes, it is. So the upper first standard deviation is where we're going to start seeing re-expansion, and then it's going to take probably another 2-month closure to see confirmation of expansion above there, and that would just be the etchings of expansion. Now, of course, if Bitcoin did just slice right through the upper first at 47K, take out the wick high at 48.5, 48,250 to 48.5 rather, and start pushing that upper second standard deviation, you're going to see BBWP tick up quite dramatically, and that's at $60,000. So basically right up against those old all-time highs. And then, of course, any tick above there and close above there is going to dramatically or aggressively increase BBWP, likely getting it back up over the moving average. I don't think we're going to see this even happen coming into the close of the year. So that means that we're probably not going to see confirmed expansion on the bi-monthly or 2-month until at minimum, we're looking at January, February, March, April. We're probably going to see the etchings of it if things continue up like this around, the March open. And then it's going to be the April. It's going to be the May open. That's probably going to be the one to watch next year. And this is probably going to provide for some, I don't think people are prepared for what this is going to do. To be quite honest, I think it's going to get a little nuts. I'm not even going to speculate because we'll have targets as things go, and it's all going to be very reasonable. We'll take it one step at a time, but quarterly's not even ready yet. We're likely to see a little bit of a volatility uptick coming into the end of the year if Bitcoin can close above the upper first here, basically right where it's trading. Well, it's actually up about $500, so it's 40,700 at the upper first. If we do see a closure above there, we're gonna see BBWP most likely. It's probably gonna maintain it might go sideways. I don't think we're gonna see this even tick up on the quarterly yet, to be quite honest, unless Bitcoin closes aggressively above the upper first, more towards the upper second by the end of this quarter, that being the end of December, so within this monthly time frame. And that's around $56,000. So, that would be, taking out the local lower high just above price action right now on the monthly at 48.5, of course. And that would be incredibly bullish to go test the all-time high and higher. This looks good. It's everything that I've explained to you guys over the past, since the beginning of the year when the lows were in. And, I was very adamant that I felt the lows were in at around 15.5. We called it ahead of time, by months ahead of time. We were looking for that area. There was available downside targets, but it didn't take them. And it was just time to move on from that. So I've been bullish pretty much all year, and so has Bitcoin. And as long as Bitcoin's bullish, I'm bullish. And that's not, Bitcoin doesn't care what I think. We're just reading charts, right? And in this case, we did now, so after the monthly, we've now, we had a weekend pass coming into the beginning of December that also closed the 4 week rather, 3 week, 2 week, and of course the weekly candles. So let's go ahead and look at those. We are seeing expansion here on the 4 week. Well, it's actually contraction. Bears don't want to see that, especially when it's closing above the upper second. That's a consolidation on the highs, with re-expansion likely to really nuke things to the upside. Well, my computer's going to take off. Probably going to have to adjust that fan profile, huh? All right, so upper second standard deviation is at 39,500 now. This was around $39,000 when it opened Sunday, and then it's now following price up. So we did get our close there at around $40,000 on the last 4 week candle, coming in at 39,972. And now we see that, price trading up and pushing up, probably, if it's going to keep continuing, it's probably going to push up against that upper third standard deviation, which again is coming in around $45,000 to $46,000. And if it does push up against it, it's likely to end up somewhere around this monthly up here at 47 as it adjusts live to price, possibly even the wick highs at 48,250 to 48.5. Now, if we do see the upper second standard deviation in the next 4 week candle dropped at that 39, we'll call it 39,500, then I would be looking somewhere around the upper first at $33,000 currently. Now, of course, that would update. It's probably going to be more like $34,000 to $35,000. So maybe even higher in that case. But we do see that this is expansion of the Bollinger Bands and not yet expansion of BBWP. And I did explain this last week, but one of the main reasons why you're seeing this is it's going to flip-flop a little bit as it mean reverts back to the highs. And then once it really starts hanging out up here and or gets above this last lower high, and on the 4 week chart, the last lower high is actually coming in with a close at 46,850 or so. So if we did start seeing that $45,000 to $47,000 monthly closes taken out, we're likely to see this, chop around and shoot back up. It's already confirmed to the upside anyway, and come back to it later. Pivot's going to be 38,650. 3 week, we're looking at a momentum pivot of 35,650. That's very good for bulls here. and it is just grinding the upper second standard deviation to the upside, with the target being the next big area here, 45 to 48.5 or so. And if it does close above here, we're going to see very aggressive BBWP expansion to the upside. And we are now seeing confirmed expansion. It is just the beginning phases of this on the 3-week as well. So looking very good. And yes, I know the Stoke is overbought. That's okay. Got a nice bullish reset, and I would expect this to stretch out more, and then we start seeing bullish resets that get weaker over time as price gets higher and higher and higher, and then we start to see things, a couple drives around wherever it puts in its next all-time high, and then take it from there. We saw this already, in 2020 on the 3-week. We had the nice bullish resets off of the lows. You got a bullish reset down here off of it was technically a lower low in its current trend, but a higher low in relation to the macro low, and a bullish reset on the 3-week here. And then it just went overbought and just kind of hung out there. And then we had the reset, we had higher highs, and then a lower high on momentum there. But you'll see why I'm pointing this out is because of where BBWP was starting to expand. It expanded here on the 3-week, which this is gauging the monthly, but it started to get confirmed expansion back here in July of 2020. And you see that there was a 3-candle structure that held the upper first. It was still pointed to the upside here. It didn't, it wasn't overbought already, but it did get overbought and then just kind of stayed there. I wouldn't make too much out of that, to be quite honest. I'd be looking at and will be tracking the bands here, because it's going to be more about volatility expansion than anything else. We can see that the basis has moved up nicely as well to around 27,354. Finally getting a nice distance away from this higher low back here on the 3-week, which was at around that 24,900 area. And if you were here, that was also another big area that we were calling out as a bottoming area. So that was one of the main targets. Here on the 2-week, we're starting to see what this is the lowest that the 2-week has ever been. And this means that it's got plenty of room to expand to the upside here in terms of volatility. There is a bit of a meme regression here with volatility, but yeah, I don't think that's what we're seeing here. I think we are going to see a nice big move in volatility, much like what we saw off of the lows of 2018 and 2019, 2020 area. This is, I don't think that this is just going to be a straight shot to the upside, but there's going to be pullbacks. This expansion is just getting rolling though, and you do need to understand that if you are bearish, that this is just getting rolling. So pullbacks are likely, to come down and mean revert somewhere to wherever the basis is over time, and or just the upper first if it's going to remain like really full bull mode. And in this case, the upper first is now in the local area that we were just breaking out of, and that's at 34,700 or so, right around that weekly at 34,750. So that big area that was tagged on the daily that we were looking for, on this failure at 37,500 here, the swing of 37,700. Prior to that, when it first swung it, we were looking for it to come back down somewhere around the monthly and weekly there at 34,750. So now we have the 2-week upper first standard deviation away from the basis being right in that area. That would be a primo place to pull back to if it was going to pull back and lose the upper second, which it's already putting some distance on here, which is at 39,250. And, the basis just below there is now at $30,000, which is right around a weekly close open. We have the weekly close opens down here on the main chart, Bitcoin in 60 seconds chart. This is a close open at 30,600 and 30,300. So when looking at that on the Bitcoin in 60 seconds chart, that's 2 swing highs. That is going to be a strong area if it is retested at some point. And I'm not looking for that to be retested until we see, this is still an ongoing move right now. And in this case, let's go ahead and look at momentum on the 2-week. And we can see that momentum is pivoted at 32,500. That's right at the daily. You'll see that on our Bitcoin in 60 seconds chart, you may recall this area, the daily and monthly, the daily support resistance in teal here at 32.4 that was untested. And then the untested daily, weekly, and monthly level at 31.8. That was the, to be fair, it was tested as resistance back here, but never as support. And that's okay. It does not, just because it wasn't tested doesn't mean that it needs to be. But if we were looking at things dramatically pulling back, that would be one area of interest. And then the weeklies just below at 30,600 to 300, where we now have the 2-week basis heading up into the lower first. Again, we were talking about looking for this being above the last higher low. And in this case, that's that 24,900 area. Now it is at 25.5, 25.6 area. So very good. And even the lower second is still above the wick lows that were coming in at that 19.5 area, coming in at about $20,000 to $21,000 there by the lower second. The weekly getting very nice expansion right now. We might as well take a look at this. This is right. This is now at a 32 on expansion, so 32%. Moving average is 15%. This is confirmed expansion, so this is not likely to, and that's confirmed bullish expansion in this case, as it is above the basis. And even on pullbacks to around that lower first, it's probably going to remain bullish. So the weekly upper first standard deviation now at 36,200. Again, that is the weeklies that we were already marking off here. 36,200 is the weekly zone right there, 36,200 to 37.7. And this is going to be a key area if we do see Bitcoin pull back from the upper second standard deviation, which it is currently trading above at 41,700 or so, where the upper second is now at 41,350 or so. It's kind of oscillating around between 41,300 to 41,350. We see this as confirmed expansion to the upside. And remember, I noted that just because you see BBWP kind of in between weekly closes cooling down, and the moving average chasing until it gets under the moving average and the moving average gets a negative slope. And even then, it still is going to get residual expansion to the upside as long as it is above the basis, which is currently coming in at $31,000. Even when it's in the cool down, you're going to get the residual expansion of the Bollinger Bands to the upside, thus giving us deeper targets over time. So even when this does pull back, it's going to be, in my opinion, a very bullish scenario. And in this case, pullbacks even to this 36.2 at the upper first, perfectly fine. If it closes above the upper second, we're going to see BBWP dramatically increase again. And then the moving average would have to chase for a little bit longer. So this, we are looking at this probably continuing, for the next week or two at minimum, and at, there is no real maximum. I mean, it's the maximum is 100% on both the moving average and, BBWP itself. But at minimum, if this was even going to try to reverse, it would take all month if it was going to do it. And that probably wouldn't even confirm it, to be quite honest, unless we saw a major rejection. We're not seeing that just yet. We're just seeing continuation. And when going into some of the lower term timeframes, we can see that the 5-day we've hit the upper second at that 41.7, 41.8 area. Of course, the wick above coming in at 42.130. So, looks good still. Upper first is now at 36.6. So right in between those two weeklies, it's right in the thick of the consolidation here as well, which is good to see. And the basis is at 31,400 to 500, cutting right across the top here. Of course, the wick high is slightly higher than that, but it is now above the closes. So that is very bullish on the 5-day. So again, a retest of this breakout, not out of the question. I mean, this could even push much further and then come back down later. But you know, this is now what I would want to see in the criteria that I told you guys to look out for, and gals. That we want to see the basis getting above the highs. We want to see the lower first above the most recent higher low. And in this case, it is not yet there. It is right around that area at 26,341. And of course, that 26,500 higher low on the wick there is what I would like to see the lower first above. So on any mean reversion or revert back to the mean, it's more likely, or will more likely paint the picture on volatility and technicals, that it will come back and just retest these highs. And until then, until we even see a high put in, this is just continuation. So don't get, you know, when we're looking to the downside, I do want you to understand that I'm not calling for a pullback until we actually see the etchings of a pullback. And this is just now getting continuation. So could it get very volatile? Well, yeah, volatility is very high on some of these lower term timeframes. We do see that we are getting, you know, a little bit of that, what I've been talking about for the weekly, where we get the BBWP under the moving average gets a negative slope, but we're getting expansion past price action of the upper standard deviations, and then we start seeing the lower standard deviations curling up. This is what I'm going to be looking for on the weekly next. We're getting a preview of it on the 5-day, and then if it does close back above the upper second, we're likely to see this, you know, if it does not, you know, follow through in the subsequent 5-day candle, then, you know, it's likely that we see a bit of a consolidation and then come back to it later. Or it could just move right back up through the moving average, and both BBWP and the moving average get a positive slope, thus indicating that this is going to continue to grind the upper second into some of those deeper targets. And we can see that some of the deeper targets are already up there at the upper third, at around that $46,000 to $47,000. So, all right. So, all right. 4-day, same look. Now this is actually in a cool down while it's pushing this is kind of what I'm talking about with the 5-day. It's getting that expansion of the upper standard deviations past price action. And then it's, you know, getting that cool down on BBWP while also making higher highs. And that's where we're seeing it tag the residual expansion to the upside, because now price has been slowing down. So it was initial fast move up, and then it's just kind of been plodding along, slowly marking price up against that upper second standard deviation. And as long as it's above the upper first, you know, what we're likely to see is a quick compression the next time that it does compress, and then a re-expansion, and it's likely going to result in upside expansion. So that is what is being painted right now, especially with the aggressive nature of the lower bands at this point. Also means that in any kind of a crash scenario, you're looking to the downside bands if the upper first is lost as areas of support. And in this case, the logical area of support at this lower first, if the basis is lost at 32, you know, 800, almost 33,000, is coming in at $28,000, which is also a weekly. It's also the high prior to the higher low over here on the 4-day. This is looking really, really strong. I, in fact, would be looking for this to just keep, you know, grinding the upper second standard deviation up. And if it does at some point drop that upper first, then we can just start looking to that basis, and it's likely to trend on the basis. If I'm being quite honest, the basis is even above the breakout area now, being at that 32.8 to 33K. This is all very, 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 very bullish. And if we do start seeing a quick compression, so it starts to go sideways, consolidate, we see the lower bands move up, we're likely to see like a quick pinch as either it moves into the basis or the basis moves into price action, and then up, or we see it move down into the basis and then take off. That's really what I would be looking for from here, because that would cool down BBWP dramatically. It would be above all the major supports, and I'd be looking for continuation. So 40,277 is going to be the 227 rather. It's going to be the momentum pivot for the 4-day. Again, I'm going to tell you that momentum pivots and oscillators probably not the best thing to be looking at right now. I'd be looking at volatility bands, and where things could mean revert to if we see the upper first of these bands lost. And in this case, on the 3-day, we can see that Bitcoin is trending above the upper first still. It was pushing that upper second. Now we're seeing that residual expansion while we got a cool down on price action. And the upper first is the area to hold to keep this going, 38,600. So right around the monthly at 38.5. To the upper second is the target. That's at 42.7, almost $43,000. If it starts to push that area, it will begin to push up to 44, 45. And closes above are going to be re-expansion. I'm not really looking for closes above necessarily right now, but we could start to see it in the next few closures, where we start to see volatility expansion again, which then just is going to send the bands a little bit more parabolic in that from the look of things right now. If it does lose that upper first at around 38.5 to 6, that monthly basically, then we look back to the basis, and that's coming in at the low side of the consolidation upside move, and that's at around 34,500. The lower first is now at 30,002 to 3. It's exactly what we want to see. That's that weekly around 30,300. That'd be this area over here, where the weekly close came in at around 30,300, and even the 3-day closes up here. So looks very good. Very strong. I would expect this to continue a little bit longer here, especially when looking at the 2-day, which is doing exactly what I'd be expecting of the 3-day if this is going to follow through. And this looks very good. Quite honestly, we had a very nice compression on the 2-day here. This is probably the most. This should probably be the chart of the week to teach, huh? This was sideways and up consolidation. We saw residual expansion getting all the way up to this area at around $40,000. That's where if we did see quick spikes up, we were likely to see 40,000, the $39,000 to $40,000 region. Well, as it just went sideways, it lost the upper first, maintained closing structure on the supports there, trended along the upper first as the basis moved up, thus getting very quick compression. And this is what I'd be looking for across everything, right? Across all of those higher time frames. And that's where it kind of oscillated around that upper first, got a nice close above the upper second as the bands were pinching together because price was now coming within, the basis was now within the price range and getting very close to price action. We saw the very quick compression of the bands. We had the cool down in BBWP. The close above kicked off the expansion of the bands, and now we're seeing that push through. And when you see bands compress this quickly, you're going to see a push through. Doesn't mean it's necessarily going to close through that upper third, but you're most likely going to see either closures or a push through that upper third. And that is coming in at 42,160, basically right at the highs there. And this is looks really good, to be quite honest, for a move to the upside. For this move to the upside, rather, to keep going. $41,000 is going to be the next 2-day closure. It's likely going to close above there today. And if it does, we're going to see these expand aggressively from here on out. It's already pretty aggressive as it is, 55 over 36. So it's got a lead on the moving average. That does mean if we see a move back down that happens quickly and is not a slow drawdown, then I would be looking for that to be an opportunity or present an opportunity. We see the daily is now re-expanded as well. So we saw some compression to re-expansion on the daily. And we talked about this last week. We talked about it on Friday, in fact, when it was pushing the upper second standard deviation, that if we saw a close above, we were going to get re-expansion. So this was a sideways consolidation. We get the pinch on the bands. We started to see that bit of re-expansion already back here, even on the move below the upper first here. But as long as it's above the basis, it's bullish. It pushed right back to the upper second, closed above on Saturday, off to the races with expansion here. And this is where people that are using momentum oscillators are like, there's divergences everywhere. Everything's going to fall apart. It's overbought. Oh no. That's why you need volatility as part of your system when you are trading. Because if you ignore volatility metrics and you don't understand how to use volatility metrics, and especially volatility pivots, then you're going to be left behind on a lot of these moves. And quite frankly, that's what was happening. This was driven by bears shorting the highs and continuing to short the highs, and they provided that injection of fuel. And once they start getting liquidated, the spot buying has not really slowed down. It's just continued. There's not a lot of spot selling going on. So they're battling the pressures of spot and then also all the whales that want to nuke them. So, I mean, if you're shorting that, you're putting yourself in a very bad position. There's no logical area to short from right now until we see some local overhead resistance, not just historical. That's one of the reasons why when looking at these targets that I've been calling out on the Bitcoin in 60 seconds charts, why have they been so accurate? Because they are historical. It's the only thing that we can go off of. And it's much easier to rip through them to the upside because they are historical, and we need local resistances to really start looking at, okay, like the consolidation. Okay, it's around basically 37.7, which is a historical area. So that just lends more significance to this area when it breaks. Then we're looking at the monthly 38.5. We saw that area get rejected 2 to 3 times. That means when that breaks, we're going to get a markup to the next big historical area, right? And that was at $39,000 right there at the weekly. Tagged it perfectly. You can go back through the videos and you can watch all those Bitcoin in 60 seconds videos. It doesn't take long to go back, just 10 days or 10 60-second videos. Take 10 minutes to do it. You can see that we've called every damn move. And it's not hard to do. That's including, I give targets to the upside and downside for a reason, because when you see continuation past certain areas, it's going to go to the next area. And same for the downside. We're now looking at local supports, not just historical supports. So when this comes back down, whenever it does, we're looking to the most recent local supports that are confluent with those historical support resistance areas. So just keep that in mind. Basically a hot tip for you. But, this is getting expansion to the upside. This is likely to continue to test further up. I would still be looking somewhere, if it can start closing specifically above 41.8 to 42, then I would start looking somewhere around that 45.5 to 47, possibly even 48 to 48.250, 500 area. To the downside, I really would closely watch the monthly at 38.5 if we start to see things falling apart at the highs here. And when I say falling apart, that doesn't mean you go macro short. Unlike there's some real bad advice out there from some people that just, it's funny. The same people that were looking for absurd targets to the upside while Bitcoin was putting in a double top, instead of hedging their bets, like, hey, if this downside area breaks, we're entering bear territory because of all the divergences, whether it's momentum, whether it's compression to expansion to the downside, like we were looking at back then. They weren't even hedging their bets, and now they're the same people that are like, it's still going to go to 12K, still going to go to 8K. So yeah, just trust me, bro. There's no technicals for it, but let me, it's just silly. And we're looking at continuation. And until we even see a daily high, then we can start looking for pullback areas of interest. Of course, the ones that I just specified earlier in the video. Let's go ahead and look at just the 12-hour really quickly here. Yeah, the 12-hour is not even finished yet. Trending above the upper second standard deviation, it's starting to push up into some really volatile areas. The basis is now starting to get pulled up above the most recent highs at 38.5. Like this is bullish as hell, man. Like I can't, there's nothing else I can really say. Even the upper first is now, starting to chase, but this is very nice expansion. We're going to see residual expansion, much like what we saw back here. So we get the compression to expansion. Usually you get a few drives, especially if it holds the upper first. And then we look for it to keep heading up. Another compression basically is what we're going to be looking for. And we've seen this even back here. We saw a nice compression to expansion, came right back down to the lower first. So to be fair, once the lower first was above the most recent low, It did come back down and retest. So, and that's currently at 37,000. So that would be in the thick of that 37.7 to 36.2 area. I highly doubt that's what we're going to be seeing here. But if we do see a high, it is in play. So those are going to adjust, though, and we're likely to see the lower first start to curl back up, lower second start to curl back up as the basis begins to catch up to price action, if it does slow down and not leg up over the next couple of 12-hour candles. So that's going to be my big take on, not very controversial. We've been talking about this stuff forever, so none of this should come as a surprise to anyone that's in this in these various chats. And as for those of you on YouTube, if you are new here, we've been talking about these prices and had these targets for quite some time. And we've been very accurately calling just about every move to the upside and mean reversion moves to the downside as well for, much longer than even this bull run from the lows. So looks good. I would look for continuation to keep retesting this 41.8 to 42K area. If it breaks, game on. We can start looking to the upside. Doesn't mean that it won't fall short of those targets, but we can start looking to the upside. And to be fair, there is the low up here on the weekly, and it is a higher low on a close that is at 43,171. So that might be one to add above here for the weeklies. So, it is a swing as well. So we probably should mark that one and have that as the next, target, even if it does leg up from here and to the monthlies. This should be the next logical area of resistance, historically speaking. And a lot of algos are going to trade off that anyway. So we'll add that to the Bitcoin in 60 seconds chart. Of course, with today's video at the after close today, we will talk about it if it doesn't get hit before then. I'm just going to knee my desk. I'm going to adjust in my chair, and let's go ahead and move on to some other stuff here that is happening and this is going to be a little bit longer of a conversation as well. Currencies and bonds. I want you to note what's been happening, not just with Dixie, which is starting to put in a low kind of right around the big areas that we talked about. So we saw the other drive down. We're seeing a bit of a swing structure here, swing high, swing low. I had mentioned above 103.50 to look for around 104 to 104.50 to 104.69 as the next big targets. We see that the low still, it set a low, but it's got to trade and get above 103.88 to 104. So I would say even 104.12 at the basis here is it's going to start flattening out. And then above there, we can start looking at 104.5 to 104.70, 104.69 if you like, because that's the exact 104.69.9 even. Above there, I'd be looking at 105 where the upper first on the daily starting to come in. Now this will adjust today, so the upper first would be below there after close today, but above there, then I'm looking for a move back to these highs, somewhere around 105, 106, 105.5 to 106. One step at a time here with Dixie. It is in a cool down, so this is mean reversion as it stands right now, but it's still going to remain. It's going to remain with that lower second target down there at 102, as long as it is trading below the basis to upper first. So wherever the basis and upper first is over the next few days, that's what I'm going to be watching. And as long as it's below there, I'm going to be looking to that lower second as still a viable area of interest, especially as the lower first is going to pass it. Lower second is going to pass a little bit, probably curl back up to around the local area that we see Dixie trading now. Now, this is coming off of multiple drives of bullish divergence. Probably not, but let's go ahead and take a look. No, not yet. So we do want to see some drives of bullish divergence to really start flipping around the daily bias here on Dixie. Even getting to the midline, that's 104.33, and bullish control zones up there at about 105, 106. So we could see it run the other way and still run right into that resistance overhead, and then come back to it later, that being the lower high resistance. But it would still have to get past that 105.09 low there. The weekly is still going to be, something that you need to pay attention to. We've referenced this quite a bit. Let's go ahead and get rid of all the garbage on the chart here, including the arrow. We'll just grab a new one. And I want you to understand that Dixie it was a trend break. It could possibly put in a higher low. So you do need to be aware of this on the weekly. And it is still going to be pressure down. So what you're looking for is for this higher low to become a lower high if it does put in a higher low. That doesn't mean it's going to put in a higher low, but above 105.89, it's likely to turn, and probably above 105 by this week's close, it's likely to turn momentum back to the upside on the weekly here. So it's kind of a race against time coming into the closes on the monthly, as we are going to start seeing compression on the weekly bands here as well, because we had a downside strike as it was just trending down. Didn't really get too much of an expansive move down outside of the highs here, where it just ran back the other way and expanded down into supports, deviated support, and then moved right back to the top side. It's now doing what I would consider as bullish, and that is you break the structure, the downtrending structure, come in and put in a higher low somewhere around the lower first. That's preferable. That's pretty bullish, to be quite honest. And I should say, the lower second, as long as it is above the most recent low that it just put in. In this case, if this starts to paint a 3-candle low structure and specifically start closing back above, 104.5, 105 region, it's going to look to at least run back to 106 at the upper first, possibly even swing the local highs again, which would then, of course, start to paint a picture as though it's going to go and make higher highs, which would then be a complete reversal structure. And that will have serious implications for traditional markets and probably, Bitcoin and other cryptocurrencies as well, as that would potentially paint some longer term strength in Dixie. You combine that with the monthly that is turned to the upside at 101.34, and we're setting up for this thing to be in a macro range, a macro volatile range when you're looking at it on the shorter term time frames. But in terms of the monthly, it's not that crazy. And I would be looking for it to play within this range for an extended period of time. That being said, it's the quarterly that you really need to watch, and that's gonna close and be providing pressure down from the quarterly at 112.50. And if you do want to really dig down, we're gonna get the 6-month close on this. That's gonna turn up. Okay, the quarterly is the outlier here. That's going to turn up on any closes above 101.43 by the end of this December candle. And then, of course, we've got the yearly, or the 12-month, which is, threatening to turn up on any closes above 103.29. So it would still be kind of painting the bias that it's oscillating around its most recent highs, and it's going to come back down, though. So I would just be very, very cautious of, if you are in Forex markets, I'd be very cautious of Dixie nuking your pair, whatever pair you're trading against it. That means that Dixie would likely be in a position of strength against other currencies. It's not a direct correlation between Bitcoin or assets and indices. It's a general correlation. So keep that in mind. I also want to point out that another thing that would run counter to Dixie kind of, failing at some of these highs or just kind of bouncing around for an extended period of time, is what's going on with bonds. What we are seeing is likely the Fed having to dip and possibly drain that reverse repo, and that's something that maybe I'll talk about some more at a different time. But we are seeing mean reversion on the 30-year yield curve here, so the long end of the curve. We saw mean reversion down to some of its prior highs, right, from back here in 2022, and it's still pressure down below 4.94%, trading at 4.446, making, being below the basis, making the lower first and available target at 4.25 again. If this does bounce aggressively, you're looking for, with the position of things right now, I'd be looking for, it to double top, to be quite honest, from the weekly perspective. Still pressured down. Daily's going to be turning soon here, but it's all bearish until it starts building some bullish momentum. Big drawdown here with expansion, and then continued compression on the drawdown with possible re-expansion if it does start closing below 4.375. It dug right into this high here. Wouldn't be much to go run these wick lows and this high over here at 4.3, to be quite honest. The main reason that I bring this up is because when you're looking at the quarterly, the quarterly's bullish as hell, even if it pulls back massively into the 2% region, to be quite honest. But the quarterly is going to turn down at the end of this month on any close below 4.92%. That points to this being pressured down sooner rather than later. When looking at the 20-year, you're not going to see that same look, but I can tell you the 20-year is dumping off as well. It's getting very, very, very critical though. So bounces, already happening. But I would be expecting over the long haul for bounces to result in lower highs and then distribution. This is not what the Fed wants. Oh, sorry, ran into my microphone there. This is not what the Fed wants, to be quite honest. They don't want what they're seeing right now, which is long-term bonds dumping off into the supports like the 10-year, coming down to the areas of interest that we had talked about quite a while ago at 4.3, 4.22. Down below here, we're looking at 3.99, so somewhere around 4%. Maybe a pit stop at 4.1%. But, this does mean, even if it starts to try to change structure, getting above the last lower high at 4.5%, it's likely going to result in either a sideways consolidation, come back to it later, or it's going to result in lower highs that then start to turn into distribution. And that's likely to continue for the longer term. The weekly is painting the same kind of picture, pressure down below 4.75. So the lower first is in play at 4.15 to the lower second. If it does break down from there, which is at 3.5, but it would still need to get past some of these supports here at 4.1%. You got that wick low, bounced off that high there. And just kind of dig into this 3.99 or 4% to 4.22%. If it did nuke down, I would be looking for somewhere around just below 4% in like the 3.9 area. The 5-year. Oh, let's look at the 10-year quarterly. That's the real thing here. This is now ran the upper second twice off of a very extended move off the lower second, and it's going to be pressure down below 4.645% by the end of the month. So that will turn momentum to the downside. Now, that's only an initial cross. And what I would be looking for is for it to, follow through in the next quarter, somewhere around that 3.5% or lower if it's gonna be bearish and not just hang on the highs again. The 5-year, looking at the same thing, 4.6% in this case, so a little bit more aggressive. Weekly is going to be right up against that lower second. So this is a potential reversal area if it hangs out on the lows here at 4.62%. That's likely to come down dramatically. Even if it does head down to 4% here on the 5-year, we're likely to see, a little flip-floppiness between the 5 and 10-year, but, it's likely going to drag down the rest of the markets here. You're likely going to see the reverse repos get drained as well. And if yields keep dropping like this, you're going to have no backstop for the banks, which means that they're going to have to start printing again, which they're already doing. But they're going to have no choice. It's either that or fail. So we're running into some pretty critical times in with the Fed and with fiat currencies here, is what I'm seeing. I just want you to understand that is, this is still expanding to the downside. It's got to put in a low. If it puts in a low that happens to get above 4.5%, then, I'm looking for a consolidation and a failure at the, lower highs, more likely than not. But yeah, even the 2-year, big drawdown on the 2-year. And the 2 years going to remain down in terms of momentum. It is in a bouncy area around that lower second, but it's more likely to hang on the lows than not. From here, looking at the weekly, it's expansion to the downside. The 2 years probably painting the picture for the entire market, to be quite honest. If folks ain't looking to get into, we've got the buying going on, but with the yields dropping that fast, who's the buyer? The buyer's probably Fed adjacent. It's the banks coming out of the reverse repo to probably fulfill and put the last of treasuries on the books. Now, the corporate side of things, though, they've been not wanting to lend. So that's also pushing the rate down. So even though they are filling, they've been negotiating interest rates down, or they've negotiated interest rates up until my apologies, the corporate buyers or the institutional buyers of bonds wanted way over what the yield already was being proposed. And so they walk away, bank steps in, and they take that yield as well, instead of the institutional buyers there. Retail, I don't think, is getting in on too much of this, to be quite honest. You might have some money markets in it, but that's your institutional guys, as they will aggregate a lot of those funds. And I think they're going to pull out, which is why you're seeing markets rip to the upside, or have been seeing markets rip to the upside all over the place. Now, in traditional markets, and we'll go look at gold actually, but essentially the picture I'm trying to paint here is that the Fed's in a rock and a hard place here, and it's not just the Treasury that's in a rock and a hard place. A lot of people are making a big deal about the Treasury, like the Fed's got all this control, and it's like, no. The Fed's reverse repo, and the way that the banks work, they work off of the asset liability side of things. They're all screwed up if they don't get treasuries on the books, right? And in this case, instead of the Fed buying direct, you're getting the banking side of things pulled from reverse repo to shore up that side of things, and a lot of the commercial side is going to start collapsing soon. It's already collapsing, but it's in dire straits, and it's going to start rearing its ugly head here soon. Gold did hit a new all-time high. Did close nearly to our target there at $2,081. Pushed up to what did it push up to? 2146. So we were looking somewhere around 2100, 22, somewhere around there. So nice little spike up. Mean reversion right back to the upper first here, which is currently at 2028. Looks good as long as it's above 2016 to, I would say the basis now is in play. If it does drop that area at 1991, quite a big move, but nothing bad just yet. I would want to see it consolidate. 2135 is going to be the momentum pivot on that spike. We're not seeing any in trend bearish divergence right now, so it's likely to hang out as long as it's above the basis. Likely to hang out on the highs here, somewhere. Maybe it swings down below 2000, and then keeps trying to the upside here. We are seeing BBWP get, a little bit stagnant here on this move, but it's not anything too crazy just yet. That is quite the rejection, though. Yeah, until we see BBWP get under the moving average get a negative slope, not worried about this just yet. But as you know, gold can run the bands, so I would still be aware that if it starts to crack below 1992 and break down below this low over here, and maybe even you might even be able to front run at 1976 to 1970, then we're probably looking at the bottom half of 1900 getting ran. Excuse me while I adjust the microphone stand here. Looks still viable to the upside in terms of bands, but it is a little hot to trot. And as long as it's holding above, the upper first at around 2000, that's looking good. 21.25 on the weekly. What are we looking at for the 2 week? I am curious. 1858, so still heavy pressure up on the longer term time frames. 1969 on the 3 weeks is something to be aware of, as that did just update. 4 week ran the upper second, 2029. So, it might be getting close. It's not there yet, though. We are still seeing the potential for it to remain up, as long as it's above $2,030 now coming into the end of the month. I will tell you that if it paints the candle anything like this at the end of the month, though, this is going to come down pretty heavy coming into next year. Not inherently bearish in the longer term time frames, though. This is still upside expansion on the monthly, 2 month. Yeah, it would look pretty good actually on the 2 month. Still upside expansion. 1860 would still be good. Quarterly, what are we looking at? Running the quarterly highs 1906, so above 1900. Looks good. I would caution to be aware of if and when 2K drops. I took profit very heavily on my gold positions earlier today, and that's CFDs on gold. So I did a lot of accumulation of physical gold for a long time, so I'm not worried about moving any of that. It's just the CFDs. I would be cautious in this area. This is a big wick. If it doesn't push past that, it's going to be mean reversion time and consolidation time. Maybe even run the other way time, especially if markets start to Dixie starts to break some highs, and markets continue to push their highs and maybe get a deeper pullback. We're likely to see gold pull back with it. We're right in the zone. Friday ended up pushing up to our targets there. 36, well, just shy of it. 36.3 was the next one. 36.245 is where it closed. What did it get to? 30. It only got like $1 above there. All right, so we're looking to the left. It's really that wick high got tagged already, and then it's just the highs. Then 36.5, 36.7, and then the all-time high. As long as it's above the upper first at around 35,680, it's looking to stay strong and keep moving up. And now even above the basis, whereas the basis is now at 35,000. And lower first is in play if it does drop that, and that's in a very bullish position as well, as long as it's above 34.5 to 34,000. Looks very, very good. Quite honestly, to over the long haul, just run the highs. That being the all-time highs. The weekly did close slightly above the upper second, giving us another target there at 36.5, right around the all-time high. 33,720 on the momentum pivot. We got expansion to the upside. Still looks very good. Of course, the monthly is a bit of a non-signal right now, but it could build into one. The upper second is adjusting to that all-time high as well. So we could potentially see that all-time high this month if it maybe a pullback in between and then come back to it later. But the all-time high is looking within striking distance. 2-week as well is at 34. Very good. Falling right on the areas that we just talked about. Nice bullish reset on the 3-week here. Not ready yet. This probably wouldn't be ready till the end of the month, but it closes above 35,200 would do it. So I would say you don't want to see 35K lost at any point. That's a 1,600 point drawdown, but even if it did draw down to that 35,000 rather, not 3,500, it's still bullish. Nice lows where it was rejected right here. So we got the low, the rejected highs right here, and then the breakout above there, and the most recent highs of the year. So it looks good. Looks good for continuation. NASDAQ. NASDAQ's pulling back a little bit here. Did pull back to the basis here after losing 15,900 or so. I would be looking for this gap to get filled out somewhere around 15.5 to that this prior high area. So yeah, about 15.5 to around 15.3. If it does drop that area, be aware of where the lower second is, right there at the most recent higher low before the gap. And that's coming in at 15,160, 15,200 area. Looks good. This is likely to result in a little bit of consolidation and then maybe a pushback to the upside. 16,100 is going to be the momentum pivot on the daily. The weekly looks very good still at 15,000. It's actually at 14,945. We're looking at early goings, a little gap down to tap on the upper first. If that area is lost, then we're looking down to the $15,000 area. Upper first is there at that 15,696. Basis is now trending up and right in between that support and resistance there at around 15,000 to 15.3. Looks good. Volatility is telling us that this is a valid upside expansion. And it's likely to continue for the next couple of weeks if it remains that way. 2-week is in compression, and if we see another closure above the upper first, we're likely to start seeing volatility expansion of BBWP that gets up over the moving average, and then it's just a matter of maintaining that upper first, pushing the upper second. We got the higher high close here, so higher low, higher high. We've got structure built. I wouldn't want to see anything below the basis at worst at 14,700 because that would then pull in these downside targets at 14 and lower lows at the lower first there, somewhere around that 13.5 to 7 area. But looks good. Monthly has moved up to the highs, making them available. All-time high run well within striking distance here. This is a higher low in the monthly. Looks very good. Monthly is, in the overbought area. This is where we see the biggest moves though. And that's at 16,000 right now. So if it does close above 16 by the end of the month, it's likely to continue the upside. Otherwise, you might see a double top, might see the bottom taken out here, and then we can look back to the macro low. But until then, it's not really a viable target. The highs are more in play than anything like the lows at this particular moment. Quarterly says the same thing as well on any closes above 13,262. Looks good. The quarterly wouldn't be in for any kind of expansion anytime soon either, unless we see it pushing above the upper second, which is significantly above the all-time high at 17,800 or so. And even on a massive drawdown in the quarterly to 11,900, 12,000, yeah, everybody's going to cry. But, that doesn't even jeopardize the macro low. Big range. Need to be aware of some of these areas too if Dixie does what I think it's going to do, which is actually counter to what most people think. Now, NASDAQ also mean reverting back to the basis, I do want you to understand that mean reversion back to the basis and a quick cool down like this, if it puts in a 3-candle structure here and or even dips down and fills that gap at the lower first at around 15.5 and then puts in a 3-candle low, this is likely to explode back to the highs, meaning the most recent highs and higher. This is bullish right now. In fact, with the lower second coming in on the bottom end there at 15,161, the more I look at this, the more I would say this is very, very bullish in its outlook currently. Now, if those areas break down, that's a different story. Then we're looking much deeper pullbacks and possibly things turning bearish in some of those longer term time frames. But for now, looks good. SPY looks good as well. 458, 459 region, which is the highs that it's at 448, 449 area. Right, so you can call it 450 if you like. Below there, then I would be looking for a gap fill somewhere around that lower first. This would be bullish at 440. Anywhere below 440, and that would be danger. And that would be down to 430. And then possibly, we're looking at any kind of bounces resulting in lower highs and then trend forming to the downside that could possibly take out the local lows. But as it stands right now, not too concerned. Hey, look at this. It double topped. Oh, no, the top isn't in. Even if it did, we're looking for higher lows somewhere around that 440 region. Like I said, below there, danger, danger, danger. It's likely to run the lows again somewhere around 430. Again, we're seeing this confluence on the weekly as well with our band setup. So 430, 440, and we've got 453 there. 453 was a big one. That was this wick high coming right there where that upper first is. So this was the lower high breakout. And because we have a structure break, we still want to see a pullback into higher low structure. When looking at the monthly, same kind of thing. 440 is going to be the upper first on the monthly. So again, danger below there because the basis is all the way down there at 414, right around the current lows. The upper second is there at 469. Nice. Not far to get to the 475 area from there, 475 to 476, and the all-time high at 480. I would say that is thoroughly in play after putting in a higher low. When looking at the quarterly, yeah, higher highs at 500 or so are in play on any closes the end of this month above the upper first. Then I would be looking for the upper second over time to get ran on the quarterly, somewhere around 500 to 515 or so, maybe even higher. Pullbacks to the basis would still be higher lows on the quarterly, and that's all the way down at 375. That would be a massive dump off. But again, that would also be a lower high on the quarterly, to be fair, but I'm not necessarily looking for something like that to occur. Even if it did, I'd be looking for it to pick itself up and move on. I say that now, but the look from quarterly momentum is already painting a possible reversal to the upside at 409. So any close above 409 this month, going to look really good for the quarterly. So, and then come back to it later. All right, that's going to do it for the bulk of the analysis today, as I am also starting to lose my voice. Let me go ahead and take a look in chats here and see what everybody's talking about as Bitcoin pushes to 42. While I was yammering on, it's pushing to 42. If you do like the live streams and the videos and the free information that I give out and put out there, it's going to keep coming as we continue to see Bitcoin move along, whether it's to the upside or in massive pullbacks, doesn't really matter. What I would tell you is, though, you should subscribe, turn on the bell for notifications so you know when I'm streaming, you know when the Bitcoin in 60 seconds videos are coming out. And if you want to help the channel out, likes and comments and that kind of stuff do help. If you are in the public chat over there, go ahead and subscribe so that you can chat with us. I do want to see what you have to say. So I'm going to go ahead and turn on some tunes while I read the various chats here. So let's go ahead and get this rolling. I'm going to keep it a little bit lower than it was before because I was told that the music and microphone mix was a little off. It was a little music heavy. You can let me know in the public and the private chats if that's okay over there. And I'm going to go ahead and read through. Yeah, you'll have to forgive me. My voice is getting a little... It's that time of year. Between allergies and then it's like... So I'm in the great state of California. Don't mind the biting sarcasm there. But yeah, this is the time of year where it can be freezing during the day and then 80. I'm sorry, freezing at night and then 80 during the day. So everybody gets a little bit of a head cold. Everybody's walking around like they're from the East Coast. It's funny actually, but yeah, it's not like a full-blown thing. No, it's just weather changes messing with my voice. Let me go ahead and look in the public chats though, as I was just shouting them out. Hello Bobby, hello No Name, Spin, Don, hello, Ivan, how you doing? Roka, Cheryl. Got quite a few others here that aren't chatting just yet, but if you'd like to chat, like I said, go ahead and hit subscribe, and then you can jump in the chats here. The reason why I have it set to subscriber mode only is because bots jump in pre-stream and start spamming all kinds of garbage that then I have to deal with on the moderation side while I'm setting up the stream. If you like the video, go ahead and like the video. That does help. Yes, thank you. All right, let me look here. Sorry, I'm just reading through, so that's why the music's on. I'm going to give you my take on BCH right now without even looking at the chart, but I will go look at the chart if you'd like. BCH is garbage. But if you'd like me to look at the chart, let me know. I will look at the chart for you. It's normal to be excited when big moves happen, but you have to be logical. You still need to respect support, resistance, volatility, trend above all. That's why I tell you trend, support and resistance, volatility, and then that drives momentum. BCH is garbage. It's probably going to pump though. I will tell you that. If alts pump, BCH is probably going to pump. Probably to a lesser extent. It's garbage. It's a dead project, dead coin. Yes, there's arguments to be made that it's not totally dead, but it's basically dead. Every once in a while they come out, make an announcement. Hey, something new's coming to BCH. And then people go and buy it and then dump it real quick. Thank you. I needed to get out of that position. Man. Said this is the Moon Boy stream. No, it's not. Not really, dude. I'm not looking for... I know that there's people that I really respect. I think do very good analysis and stick to their guns, even if I don't agree with them all the time, especially on lower term time frames. but they're bullish for new all-time highs this year. I'm not necessarily that bullish on new all-time high this year. I'm bullish next year. First second quarter of next year for an all-time high that's like really ripping. Maybe that doesn't mean that things can't go and tap on the all-time high. Like things get super euphoric coming into a massive Santa rally or something that probably dumps off, or maybe gets close. That's possible. I've shown you that it is possible, but I'm not looking for that to happen, to be quite honest. That'd be a substantial move above the upper third standard deviation on the monthly. And they need time to expand. I doesn't mean it can't happen though. I'm just not looking for it this year. I know that some are, and that's great. They can, I can't argue with their analysis because one, they've been right and I've been right. But it's more of their analysis is based on a little bit on speculation, whereas mine is like, these are the strict levels, and I have to do that. That's just how I trade. That's how we have such accurate targets. 2016 expansion in 2017. Yeah, I mean it did roll. It did roll. You're right. But 2016 it had already taken out the the lower high from 2014. And that's actually an interesting thing. So if we go back and we look at at least I think, maybe I'm wrong. I've never been wrong in my entire life about anything ever, but maybe this would be the one time that I was. Yeah. It pushed past it didn't push past the all-time high. It was the end of 17. It was May 17. Go figure. I'd be projecting somewhere around May as well for new highs of next year, somewhere around May. Take care, Cheryl. Yeah. Okay, how would you define a BTC reversal at this point? What would need to happen so that you would enter a short position which meets your criteria for risk and reward? And the risk and reward that I would advise obviously is 1.5 to 1. Just like everywhere else. It's nothing revolutionary, right? From this current area, it depends on the time frame. What are you looking for in terms of a short position? Is it a scalp, or is it a a bit of a short-term swing position? Because I wouldn't be taking long-term shorts. It would have to be a short-term short, and it would be to somewhere around 39 to 39.5. To be quite honest, it'd be somewhere around the open, or maybe even to the upper second on the daily. It would be a short-term position. I'm not interested in any shorts right now. This is uptrending structure on the 4-hour. Even on the 15-minute, this was a decent short. Back to the lower second off of the lower high here, and that was it. That's all you got off of this one, and that's just then pushed it right back to the highs. Right, so there was a scalp here, about an hour prior to market open in the U.S., the New York session. For me, at around 41.8, and so that would have been it, because the 41.8 to 42 is my weekly, and that was it. And I didn't even bother taking it. I was sleeping. If this. From here, if this low gets taken out, then I'd look for a lower high and then take a short-term short back to the lows here, and then possibly target 40,000 to 40,500 down here. but it's all short-term scalps. These are nothing crazy. For a daily, I mean, from here, it's got to at minimum take out 36,700, 36,500 area. 36,750 is where it came in on the low. 36,715, sorry. I'd need to see that taken out and then it bounce into a lower high, and then I'd be shorting into the local range, but nothing more. If it broke down, great. Then I'd just be taking it level by level. Right now, I mean, even if you were going to take a short, best you're probably going to do is back to 38K, 38.5. Until because you need to see trend reversal or trend reversal setup, at least a trend break, to even look for consolidation shorts, to play the range back to, mean reversion. And right now we're not seeing any of that. So, and what if I need to see how strong this is? Just an uptrend. There's no short here. I mean, you can be bold and you can scalp in the middle of this, but you're likely to get blown out quickly if it continues. But from local structure, I mean, this was an obvious short. It was at the weekly, and you short it back to the lows here, and you take your first TPs. Maybe you get back in a little bit here, or you just let it ride down to the bottom here, and as soon as you see the 3-candle low get going, get out. I mean, it would even be a little scary in this scenario to even get this 3-candle low, because it did put in a low. Now, granted, it was still, headed down, right? It had already tried its uptick here, and this was pressure down. So, you just take a structural short. Maybe lower term time frames could tell you more, but there's not much here, even locally. Now, I would pay attention for a drawdown into 41,000 again if we see this low taken out at 41.5. Then I'd be looking for 40,000 or 41 to 40,500, possibly 40,000. There's nothing safe here on the short side. You can do some degen scalping in and out, but you're likely going to have to be lower term time frame, and that also increases the risk of getting your position blown out, because if you're scalping, you're probably higher leverage. If you're higher leverage, you're going to have your stops closer, and if you don't have a stop, you're just going to get liquidated, obviously. I mean, there's people shorting this lower high, right? Oh, it deviated, but it broke this high. I mean, this is where I don't understand how people end up trading. Like, there's people shorting this high that caused the move back to the higher highs, right? But off of this low, you had a higher high than this high here, right? It even closed higher than the wick, I think. Closed right on it. Came down, higher low, boom, up. Now this is a beautiful higher low. You could take this back to the highs, right? So it closed higher here. You could take it back to the highs. It's above the basis. It's looking for expansion back up to this one here at 41.8, and then 42K again. There is no logical short here. So if you did take that one, I'm glad you got out, because this is not, this was a structure change. We had a downtrend to a trend break. So the logical thing you're looking for is a higher low. I wouldn't be shorting until there's something obvious showing on the daily, and there's nothing. I wouldn't even bother scalping until there's something obvious showing on the daily. Let other people get themselves in the way of this. And then come back to it. You shorted this 41.8. Okay. I don't use anything higher than 3 or 5x, but I also have I have a much different account size than many. I'm not willing to risk derivatives trading higher than 5x. So it's too risky. You can magnify your gains, but you magnify your losses as well when you up the leverage. There's been times where I'll jump in and just do a 3x scalp. But it's all about size. I have more size to play with, therefore I have more to protect. If you're just gonna gamble, that's what most high leverage is. It's just gambling, because one wrong wick and you're done. I have always encouraged people to build slowly. It goes a lot faster than you think, because when you're using the high leverage, you might win a bunch, and then as soon as your first big loss, you're taking a big chomp out of it. If you just 3 or 5x the entire time, more trades, maybe more of those scalps turn into swings than not. But you end up around, it's less stress, and you end up around the same amount and less likely to blow up your account. You guys have got my undivided attention for another 15 minutes, so use it wisely. Questions only. I'm not really going to look at too many charts. Maybe you can convince me of a chart, but that'll be more like Wednesday, Friday. We'll look at alts and stuff if you want. If you're paper trading, you use what you have, but you leave some for, if you got $10,000 paper trading, then you enter positions that you can build if it's a swing up to like 3,000, and then you've got 3 other times that you could average that trade down if it goes against you if you're longing, or average it up if you're shorting. If you miscalculated and you're practicing, it gives you room, and then you use lower leverage, which also gives you room, and you enter in lots, like $1,000 lots or something. Well, we've got a little bit of a messy 3 candle here. You want 3 candle structure? So this is a high. We've got 4 candles though for this high. We've got these 3 candles that were up candles, and as soon as this candle here, this 4th candle, came and closed below the wick low and the close open here at 41,817 or so, which is probably getting a back test about now. You've got a confirmed high, and quite honestly, I want to see bearish divergence building, so I would have RSI. There is no bearish divergence right now, so it's still just an uptrending structure. But, for instance, 3 candle structure here, technically it's a consolidation high, but if you take the 3 candles here, you've got the open at 41,610. You've got the close over here that actually came in a little bit higher, so it ends up being a 4 candle. But what you're looking for in a classic 3 candle is you're looking for the open, looking for the middle candle to be a little bit higher or equal, and then the 3rd candle come down and close below the open, then you have a 3 candle structure. But in this case, this was the high here on the close at 41,631. It chopped around and made higher highs, but it really, between this here and this wick is what is your zone. So if you're looking for the logical area to pay attention to, this was your area, which just bounced off of, by the way. And as soon as it closes back below that open, it's biased to come down a little bit more and test these wicks, which it did, and it even closed below them at around 41,550, 560 area. and that would be the next area that you're looking, but it's so tight that I wouldn't be trading any of this. And then, the next area below there is, it tested these highs and this high over here, and it broke down. So you're looking to the low side structure, which is what got hit at around 41.5. That would be the trade from this high area when it started to fail. On lower term time frames, you would have seen a 3 candle structure in here. So you go down and you look, and there's the the railroads lower high, still a higher low. It goes out down and takes out the lower low, goes to the lower first. There's not much of a trade there though. That's just a local one. Here's a good one. You got your wick high, which by the way governed the closes, so you've already got some structure here to pay attention to. But you've got this area to pay attention to. Right at the high. So you've got the open here at, what was the open? 41,936. Close came in below it. There's your 3 candle high. This is also building divergence here. Prior to this move up, and this was just another drive of bearish divergence all across here. So you're looking for a move back down to support. After this candle closes, you're looking for this high, 41.7. Next high you could take at this guy here. It's about the same as 41.828. Basically closed open right on this high over here. So the next high you're looking at is kind of 41.828 to this guy at 41.8. And then you're looking at the next area, 41.7. Yep, confluence is there. And then you're looking for these highs over here and this low at 41.5 and lower. As it starts to take the highs out, you look at the lows, and it wicked down to around 41.3. I wouldn't have been looking anywhere close to local, outside of local range. It's trending on the daily. How long did it take me to get this good at it? I don't know. I mean, not long for me to understand all of it. For me to actually get good at trading, I want to say 2 years to get good at trading, and to gather the amount of knowledge that I have. We're looking at 20 years. Been trading in markets for about 20 years. And I started with options. But, you need to understand all these basics before you get to options. But that was my real start, was in options. And never really had to deal with too many issues. Someday I'll get into personally that I got cocky in 2016 and took out a trading account. But it was purely cockiness. Just had nothing to do with I don't know what I'm doing. It was just being cocky and over leveraged. In fact, one of the only times I went over leveraged, blew up an account. I recovered very quickly, rebuilt my account, and it was very, very good. And it's been very, very good since. Now that said, I mean, I blew up the account, but I also had taken so much profit off the side. It was just the account that got blown up. I didn't like risk all my Bitcoin or anything like that. But I did blow up a trading account. It was sizable. It happens to the best of us. You're going to be wrong, and you'll especially be proven wrong if you're really cocky. And at that point, I was being really cocky. That was... yeah, that was in 16, right? Maybe it was 15 into 16. It might have been 15 into 16. You know, I'm old, so... yeah, it was 15 into 16. Yeah, maybe it was around the bottom. Yeah. Because I caught this entire move up into 17. It might have actually been around here. Yeah, you know what? It might have been around 15 and right into 16. Yeah, it might have been right around this 3-candle structure. Because I had, I took and I moved a lot to cold storage, but I had kept my trading account open and we were still in the compression phase, and I was looking for it to compress more. And I think I was looking for this to get taken out and to go test somewhere around 284, if I remember correctly. Somewhere in the mid 200s, and it didn't, or 300. It might have been even 300. It might have been this close open that I was looking for, like 320. And I was over leveraged, and it was really low liquidity on the exchange. To be fair, I could have got out of that position if it wasn't such fucking low liquidity. And if it was a little bit more higher liquidity, you know, high liquidity like it is now, I probably could have got out with the majority still intact. Reverse position, but it was a wick that caught me on the exchange and just wiped me out. Took that trading account with it, but I rebuilt it pretty quickly. And then, I mean, right after that, it was a Bullzooka, so. No, Ivan. It is not. This 3-candle structure here in 2020 did not faze me at all. Whereas this one, I did start to get a little bit like, this might actually come down to the basis again. But because it didn't close below the open back here in 16, I was like, nope, we're gonna go up and up for a while, because we started to see the expansion down and the expansion up, and it just skated along the side there, and that upper first, it just went parabolic on the monthly. And I was adamant that this was going to be the high in 19. Main reason why it was 19, once we saw this failing around the close open of the highs, and then this candle right here in September of 2019 came in, I was like, we're going to mean revert back to the basis all the way. And then we have to be very, very careful. This was also a downtrend on the weekly back here. And everyone was calling this a black swan. And I was like, it was a lower high on the weekly. What the fuck are you talking about? Fucking buy the dip says hi. Can I look at Goldfinch? I mean, if you'd like. I'm only gonna do one or two because we are wrapping up here, but well, you're gonna have to tell me what exchange you want. Because this didn't come on exchanges until I don't think anybody at this gate have another one. Nope. You can just take the yeah, perpetuals only started recently. Oops. Let's go ahead and check finance real quick. I think Goldfinch, I've heard of it, but I think it didn't come on until just use the trading view chart. I mean, on the monthly, it's close open right at the upper second, which is very little history, but we're looking at the close open like breakdown candle is what it just hit. If it's going to be bullish, it's going to push up to somewhere around 223 to 338. I doubt that this gets back to where it was when it opened on exchanges anytime soon, but it is possible. 330 is in sight, but what I will say is it's probably going to look for some mean reversion pretty soon. 106 is the pivot. There's no in-trend bearish divergence or anything like that. Let's look at the daily. Yeah, the daily's starting to paint some bear divs. Below 148, looking at this coming back to its higher low over here at around 118 to 125 or so. What was this low? 110 to 121. So somewhere around there. If it does drop around $1 though, this thing's going to mean revert hard, and it's going to come down to somewhere around 75 to 70 to 80 cents or so. Yeah, it's going to come down to this low, or this high rather, to possibly this high at 62 if it does drop around $1. But other than that, it's probably going to consolidate on the highs if Bitcoin continues. Bear div zone, let's go ahead and look. Let's update this to be, we'll do 38. Let's take a look. Drop the bullish control zone at 137. Scale midline would be $1.09. Bear control zone would be 52. So you don't want to see it dipping that far. If it does, it's going to throw bullish divergence drives here. So I would look for like a drawdown. If it does lose the upper first here at around 158, I'd look for the lows again at around 110 to 125 or so. If it does start to break out above the 172 close open up here, I'd be looking for the highs again at 181, and then from there probably looking around $2 to 221. That would put it into the lows over here, and then it probably goes for quite a bit more after that, probably over time up to that 330 area. So yeah, I mean, if it can push the weekly at 210, 211, and then it's going to be pretty quick to around 330, 340. Maybe even run the highs up there, because this is a log scale chart, so maybe even start running the highs around 4.5. But yeah, it's a breakout. It looks legit. It does need to put in structure though. I mean, it's got a higher low, higher high, so you just need to see another higher low and then it's good. And on the weekly, the upper first is right at $1. That's the area you don't want to see dropped. Otherwise, 60 cents is in play again, somewhere around the 60 cents to around 70, 75. But other than that, it's, you know, it's building structure. It's got a bullish weekly structure so far. It just needs to put in another higher low. And I highly doubt, unless we see some sort of crazy crash, it's going to come down below 33 cents. So it's probably going to pull back into a higher low structure. You know, and you can take the local highs that it's, you know, it's pushing this high side wicks up here. I just looked to the next one level by level, and that's coming in at 123. So that's the 110 to, you know, 125 region that I just talked about. Next area would be $1. That's around the upper first. So that'd be the next two big areas. If it does drop that, then you're looking somewhere around 85 and then 70 to 75. At worst, you don't want to see it putting in anything lower than 46 to 50 cents. That would be below the basis. But it looks good. Breakout looks legit so far. It's just short charted history for centralized exchanges. So it was a DEX prior. It was on DEX's prior to that, and I don't really have the history, and I'm not too interested in the history before that. It's more about what's happening now. Bitcoin, you know, if Bitcoin can push up to the next weekly at 43.2 or so, then I would be looking for that to keep legging up. It is starting to run out of momentum on the daily, so I would be looking for consolidation or pullback from here pretty soon. Maybe another strike or two higher before a pullback. So yeah, it's getting pretty critical. But we've seen alts just moon from liquidity, and this is fairly low liquidity. So hope that helps. I should probably just get my actual office chair in here, and instead of this really comfy chair that I like, this thing creaks like crazy, and I know you guys can hear it over the microphone here. BlackRock and Coinbase are invested. Yeah, cool. I mean, one of the things you're going to find being subscribed to me is charts tell you everything you need to know. This would tell me that there's a big there's bigger investors involved, so that makes sense. Speaking of, one thing that I will check on just because I am interested right now is where Coinbase is. Yeah, it did close above 132. Nice. So we had marked off 132. Next big upside area to hit be 156. And then above there, around 194 to 200. Nice. Well, if you bought under 98 cents, just beware that if it starts to breach back below $1, it's probably going to draw down into that 70 to 75 cent region. Coinbase though looks good. This is beautiful expansion. So if it can remain above 132, it's gonna hit that 160, 155 to yeah, it's gonna be the back half of the 100s. Got to see if it can make it above 155, 156. And if it can, 200's the next big area for Coinbase. I'm curious what MicroStrategy, look at that, right into our zone here. Closed above after wicking it at 522, and then boom, right up to 575. So playing out very much what we thought. If it can get above 623, this little spike high here, And then we're starting to look to about 650 at this high. Next big area is going to be excuse me, the bottom side of the highs up here around 690 to 700, and then 750 to 775. Beautiful. And we already know GBDC broke out, and it's also trading above its lower high. This is by the way, this is the March 2022 lower high, so we're getting indications here from GBDC that Bitcoin wants to go and test. It's likely that it wants to go test the 48,250 to 48,500 high, just so you guys know. It can be an early indicator. Is it due for a pullback? Not yet. No in-trend bearish divergence just yet. It just consolidated after that one drive. We are just now seeing that it's getting up there in BBWP, but it's just rolling on the 2-week. Yeah, the 2-week is the one giving it away. Yeah, above $30. This is gonna test quite a bit higher. Wow, very nice. Probably should have checked that during the bulk of the analysis here. But that is going to do it for me today, guys. If you have requests, typically what I'll do is Wednesday or Friday, I'll do altcoin requests. This week it's probably going to be Wednesday. Friday's my son's birthday, so I'll be doing other things on Friday. So Wednesday we'll do some alts towards the end of the stream when we're just doing hangout time. And then we'll kind of go from there. So be prepared for some of the areas to the upside to possibly get tagged. Some of those deeper targets if we do start seeing Bitcoin crack above 43, especially 43.2 or so. Need to see a 41.8 to 42k close, and then we can start raising that target up to 43.2, and then from there to 45.5, 47, 48.5, so on and so forth. If it does drop the 39k weekly in the upper first here, then just be aware of the monthly at 38.5 to the weekly rather at 37.7. So this would be the logical local areas to look. Below there, 36.2 by the lower first. But other than that, it's up and to the right until proven otherwise right now. And then come back to it later. With that said, I will have a Bitcoin in 60 seconds video later tonight. And tomorrow, I should have one. Provided there's something to update you on. But other than that, Bitcoin in 60 seconds short video will be here on YouTube. Go ahead and watch that later tonight. Usually comes out around 7 p.m. Pacific Standard Time, 10 p.m. Eastern. And it'll be also on the Twitter profile or X profile at CryptoLandy. And then tomorrow, if there is something to update, I'll also have a Bitcoin in 60 seconds short video. And then Wednesday will be our next live stream. You guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and above all, no matter what, stay safe. And with all of that being said, Landy's going to stall for a second while I go ahead and do this. I'm going to leave the tunes on, so you're more than welcome to hang out and chat amongst yourselves and scrub back through the video. Tunes will be on at the end. And yeah, with all that said, Landy out.
Forces has announced that a flying disc has been found and is now in the possession of the Army.